Alright guys, look at this. I just turned a tiny $500 account into over $8,000 in exactly 30 days. And because I finished on the top of a leaderboard of a trade competition, I won another $8,000. There's a total profit of $16,000 starting with only 500. That is a 3,200% return. Crazy, right? Now I'm gonna be honest. I didn't do this by acting like a gambler. I didn't full port, I didn't hope and pray, and I didn't trade 50 times per day. I did this by using one single entry model and ignoring 90% of the market. And in this video, I'm gonna show you exactly how I did it. So you can just copy the frameworks. We're going to speedrun this. 3 steps. First, we're going over the one model I used. Second, the risk glitch. How I survived when everyone else just started blowing their accounts. And third, the math you need to scale a small account into large numbers, which you can use on prop firms and personal accounts. Cool, let's go. Most people treat prop firm accounts and these competitions like a lottery ticket. They let their monkey brain take over. They leverage to the max, chase every candle, and eventually just get wrecked. That's why 80% of the competition was already out by day 5. They wanted the excitement, but they got the liquidation. I didn't do that. I treated this like a casino business. I acted as the house. I realized to win this, I didn't need to be a genius. I just needed to be the only guy in the room who wasn't emotional unstable. Because here's a secret. Complexity is your enemy. And when you have only $500 to start with, you feel the urge to catch every move. That's a trap. Don't do it. To flip this account from $500 to $8,000, I stripped everything down. One entry model. And I told myself, if the setup comes, I'm going to shoot my bullet. If it's not coming, I'm sitting on my hands and just do something else with my day. Let's look at the chart. This is the model. It's part of my market maker blueprint. And it's so simple. Every beginner can do this. I look at 3 things. I look at the higher time frame bucket, the ITF bucket, and the lower time frame bucket. Higher time bucket is daily, weekly, monthly. ITF is 1 and 4 hour, stands for intermediate term time frame. And a lower time frame bucket is 1, 5, and 15. Here is your higher time frame bias. This is your lower time frame structure. Here is your execution. On the higher time frame, I'm looking for price to come back into internal range liquidity. Internal range liquidity is for value gaps and order blocks. External range liquidity are all highs and lows. So I'm just waiting on, for example, the daily, go from internal to external. That is it. That's my bias. If I see that on the higher time frame, then I drop to the 1 and 4 hour to look for market maker models inside higher time frame internal to external bias. And what I mean by that is if you know what a market maker model is, it starts with an original consolidation, then it trades lower and lower and lower into a key level. That is this key level on the higher time frame. But now we're looking at a 1 or 4 hour structure. And all I then want to see is this. This is a smart money reversal. Make it easy, no fancy names. It is an aggressive sells into that fair value gap or that order block, and then aggressive buys back into the range. A break of structure is when this last high that made this low is being violated by this move. And we do this on the 1 and the 4 hour. And once we have that, once we break that structure, it will leave behind clues like inversion fair value gaps or order blocks or breakers. And inside those on the 1 and 4 hour, there is then when we drop to the lower time frame on the 1, 5, and 15 minutes to look for the structure. So from here, we can just go to the lower time frame to see, do we see the aggressive sells, aggressive buys on the 1 and 5 minutes, leaving order blocks, fair value gaps, breakers, and then take your entry right here. That is it. And I've dedicated videos to internal to external, liquidity, market maker models, and also lower time frame execution models like the 10 AM game here on this channel. I'm not going to waste your time and break them down step by step. I will also link those videos inside the description. This is the first big trade of the trade competition, where I only used a small percentage of my initial balance to get a huge head start, a huge profit on the account I can later use to compound with a 5 risk to reward. How? Let's look at the buckets. First, daily bullish fair value gap from internal to external. The initial drawn liquidity is right here. So the initial take profit point was here. The reason why I held had to do with the economic data that was coming out. Because at this point in time, there were talks about multiple rate cuts, quantitative easing, that means the money printer is going up. And if you know what it means from a fundamental perspective, you know that an asset like silver or gold or stock markets with the money printer or with quantitative easing will run like crazy. So I was expecting a big expansion here on silver. So that's the reason why I did not close here, but held it until a 1 to 5. The reason why I closed at a 1 to 5 was because I wanted to use that money from the profits to recompound into new positions, the ones that we're going to discuss after this. From the daily internal, let's drop to the ITF to 1 and 4 hour. And here is where the entry is taken. And what do you see here on the 1 hour? Aggressive sells, aggressive buys, leaving a 1 hour fair value gap here. So this is already the first hint that we want to go higher. And once I saw this candle being printed and we rejected from this first fair value gap, right here is where I took the entry. And then in hindsight, you see another fair value gap, you see another order block being created. And if you go back to the buckets on the ITF, this is exactly what you should look for. Let me show you. This is what we saw on silver right here. And inside this price, actually, you can even drop like to the 1 and 5 minute to find a similar entry. So what I see here in the lower time frame, fair value gaps, just follow fair value gaps and displacement. Fair value gaps, one here, with order block sitting right here, big massive order block that's been respected, and then we trade higher. So here on the 5 minute, you could also find your entries. I took this from the 1 hour, and I didn't even use the 5 minute because the bias and the drawn liquidity was so clear on the HTF and the ITF. The lower time frame is not necessary. And I know majority of you watching is an intraday trader, but sometimes you don't even need the lower time frame. You can just enter with your stop loss in a good place and you should be fine. So from the internal to external on the daily, then it started running and basically traded the low of the whole session here on Friday and just expanded like crazy, like just up only, and it hit TP right there within a few hours actually. Like this trade was taken on Friday and TP was here on Monday already. So this one gave a nice $1,700 profit. This trade was the basis of the success of the trade competition. Without a big win at the start at these kind of competitions, especially when you want to compound very fast, you need a bigger win at the start like this. So you can now use the 1,700 from this trade together with the 500 that was already on account to then spread it out under multiple positions that you can compound as well. Now you don't risk 1, 2, or 300 per trade, but now you can risk 600, 700 per trade because you have more capital to play with. And yes, I'm aware that the percentage are very big compared to, for example, prop firms or a personal account where you most of the time risk between 1 and 5%, maybe 10% of the account. But there is a time element involved in these kind of trade competitions where you need to risk a little bit more because you don't have the luxury of time to let it compound because it's only 30 days. But the cool part is this model repeats multiple times per week on multiple different assets. Forex, indices, metals, crypto, everything. The next bigger trade was on GBP US dollar using the exact same logic with the HTF, ITF, and LTF with the 3 buckets. This trade on a higher time frame, we see a daily bullish order block sitting here and also a bullish breaker. And this is the starting point of the idea that was taken on Tuesday, December 2nd. And I just dropped to the ITF to find the structure. Here we're looking at a 1 hour chart and the green line is the daily bullish order block. See an aggressive sells into the order block, then aggressive buys coming in, and your eyes immediately should go to this right here, a fair value gap. Once you were there, right here, there is where you could take your entry. And now based on this higher time frame logic and the ITF logic, let's drop to the lower time frame. Let's see the 15-minute and see how you could also take an entry on the lower time frame. That's exactly the same structure with fair value gap here, order block sitting there, then another fair value gap right here. And here is exactly where I took the trade, right here in this fair value gap at 32.03. Right here during the PM session. So the HDF bucket is a higher time frame order block, and then on the 1 hour time frame we did aggressive sells, aggressive buys, and here on a 15-minute time frame together with the 1 hour time frame you could take your trade. And to be completely honest with you guys, my original target was these equal highs, but when I saw this expansion without any retracement, I wanted to use that profit to compound the rest of the account even more. And with this trade, I was even in the first place for an entire week before the rest of the top 5 started to catch up with me. And also the majority of the time, you won't have these clean expansions. There's a little luck factor involved. Most of the time, it will be with more retracements like this. But this was just one big clean trade to a drawn liquidity. And here's a trade that was taken in the final week and got me to the 2nd place of the trade competition and eventually to the $8,000 balance and the $8,000 price with $16,000 in total. Higher time frame bucket, daily, internal to external. Drawn liquidity is here, but with the time element involved, I did not hold until that. I already had like a 1 to 7 or 1 to 8. It was enough. And I didn't want to risk price retracing and then go higher. But after the competition, there was a deadline involved. It was the final few days of trade competition. So I didn't want to be at risk of price just coming back here and vaporizing the paper profits. I wanted to look in. I wanted to look in the top 3 spot at least. Because before this trade, I was by far not at 2nd or 1st place. I was like 3rd, maybe 4th. I was hanging on by a thread. And the number 1 and 2 were already miles ahead of me. If I remember correctly, I was at $4,000 balance and those 1 and 2 guys were already at 7. So I need just to close this trade to secure my spot in the top 3 to be eligible for the bigger prices. So higher time frame, internal to external. Let's drop to the 4 hour to see the entry logic, see aggressive sells, aggressive buys, leaving a 4 hour fair value gap. And you guys know by now that this is the ITF 4 hour structure. And then we can just drop to the 1, 5, or 15-minute to find the entries. And if you drop to the 5-minute time frame here, you see price coming back, aggressive sells here, aggressive buys here, with an inversion fair value gap, with a bullish fair value gap. All the lower time frame structure is there as well. That is enough for me to press the button. And then price just rockets upwards with a little retracement here during the Asian session. And on the final day of the trade competition, it expanded again, locking in the final few profits of the competition. And I repeated this setup many times during these 30 days of the trade competition. No deviation, no feeling the market, just executing the data on a model that works in the long run. The one model I just showed you that is part of the market maker blueprint. But a good strategy is not enough. You need aggressive defense. You think you need to take massive risks to win the competition? Wrong. You just need to survive so you can let do the compounding do its work. My rule is very simple, the 2-bullet rule. If I take 2 losses, I'm done. Screens off, walk away, go to the beach. No revenge trading, no trying to get it back. Preserving capital is the ultimate offense. But finally, how do you turn $500 into $8,000 and with the prize money even $60,000 without reckless gambling? And it's by using the house's money. And what I mean by that, if you start with $500, if you go to 1,000 or to 2,000, you're not risking that initial 500 anymore. You're risking free money, the profits money. And this is the cheat code. I wasn't afraid to lose anymore because the principal of 500 was safe. And this allowed me to execute my one model without hesitation. While other traders were scared to pull the trigger because they were risking rent money, I was aggressively executing because I was playing with profits. If you have data on your model, you know that something works. Together with zero fear, you will get a massive ROI. So listen up. I didn't turn $500 into $16,000 because I'm a genius. I did it because I was the most bored person in the competition. I waited for one model, I respected my data, and let the other guys blow their accounts where I was sitting on my hands. The trading industry sells you excitement. I'm selling you a repeatable, boring trading business. That is the speedrun to becoming profitable. If you want to learn the exact model I used to flip $500 into $16,000, the entry criteria, the risk rules, the data points, I teach it in my new Market Maker Blueprint. I'll leave the link to the Market Maker Blueprint inside the description. And next to the Market Maker Blueprint, make sure you watch the video that's now appearing on the screen. Use this video together with this one to grow even faster. I'll put it on the screen somewhere here and you'll also find it in the description. It's time to stop gambling, start winning, and I'll see you in the next one. Bye-bye.